Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Today is Friday and happy Friday to you folks. In today's price action, what we are seeing is again that whipshaws for the price action for the Dow Jones Index between gains and losses. Why? Because investors are still somewhat confused how to deal with the massive surge with respect to coronavirus that we experienced in the United States. Because remember, yesterday we had biggest one-day surge in coronavirus, and this has really constrained the reopening of the US economy in the United States, and many of the states are refraining from taking any further measures with respect to with the reopening of the economy. Now, what does this mean for the equity market? Of course, yesterday we experienced that the U-turn for the US equity market, because in the morning or until the early days price action, the Dow Jones Index was trading lower. But then during the final hours, speculators came into the market, and as you can see in the chart, the Dow Jones Index closed well in positive territory. Now, of course, even now the Dow Jones futures are trading negative, but we are seeing some decent gains for the European equity market. The DAX index, as you can see in the chart, is on track to record another positive week in terms of its price action. Now, why are we seeing this surge in the upward momentum? Traders are somewhat optimistic that given the current measures, for instance, that the US is not going to reopen its economy, or at least certain governors of the various different states are refraining from doing that, or they are slowing down the opening process, is perhaps really going to tackle the issue at its core. And this is what we have seen previously when the national lockdowns had happened. So investors are really thinking that yes, this is a very positive element. But my major concern with the equity market, especially for the Dow Jones Index, is that it has crossed below its 50 and 100 week moving average, and this is the third time the price had an attempt to cross above and have a close above these moving averages, but we have failed 3 times so far. So what does this mean? I think more weakness is ahead, and given the fact that net positions by the non-commercial, or let's just say hedge funds, are short, and they are at the biggest level that we have seen in nearly 9 years, I think it is likely that the stock market perhaps may see some more weakness in the coming weeks. And this is especially quite important because we got only a few days left, folks, before this quarter ends and the new quarter begins. And as the new quarter is going to kickstart, what we are going to see is again the same sort of a pessimism that we've seen in the Q2 with respect to corporate earnings, and outlook isn't really going to be that great. Anyways, you can always protect your upside and downside positions by using AvaProtect. That's all for today, folks. I'll see you guys next week.